Hey there! In today's video, we are going to talk about the shiny yellow metal that we all love to love. Gold. We'll take a look at how gold performed in 2022 and what we can expect in 2023. Plus, we'll dive into whether it's worth investing in gold and adding it to your portfolio. But that's not all. We are also going to take a peek at some gold mining companies and their publicly traded stocks. By the end of this video, you might just be adding a few of these companies to your investment portfolio. So get ready to learn all about the precious metal that's been a valuable asset for centuries. Who knows, maybe gold will become your new favorite investment opportunity. Gold is like that one friend who always has your back when things get tough. In recent years, gold prices have been influenced by factors like the COVID-19 pandemic, political tensions, and global economic changes. When the pandemic hit, everyone turned to gold like they were turning to their trusty best friend for advice. And sure enough, gold prices reached a record high in 2020, making it the friend that everyone wanted to be around. But just like a fickle friend, gold prices can be a bit unpredictable. Since then, they've been up and down like a roller coaster, making us wonder if it's time to ditch our friend for someone more stable. However, as of December 2022, gold prices are on a steady growth trajectory. On 31st January 2023, World Gold Council announced 2022 was the strongest year for gold demand in over a decade. Annual gold demand jumped 18%, which is 4,741 tons, excluding over-the-counter or OTC trading. Investment demand, excluding OTC, reached 1,107 tons, plus 10% in 2022. Total annual gold supply increased by only 2% in 2022 to 4,755 tons. Mine production inched up to a 4-year high of 3,612 tons. Gold, the precious metal that makes investors go wild and brings joy to the heart of pirates, is often viewed as a safe haven asset in times of geopolitical tensions. Today, there are still more questions than answers, but in 2022, gold has continued to be supported by greater risk and uncertainty. Ongoing tensions between Russia-Ukraine and China-Taiwan have been the most obvious culprits, but let's not forget about the China-US trade dispute and Turkey's soaring inflation and the crash of the lira. It's like gold is playing the role of a superhero, swooping in to save the day during times of global unrest. When inflation is high, the purchasing power of your money goes down, making it harder to buy the things you need. That's why some investors turn to gold as a way to protect their wealth, since the price of gold tends to rise when inflation is high. Plus, gold has a limited supply, which makes its value more stable than paper currencies. Gold is the one and only real currency in the world and will stay forever. Our next price target is the double top at $2,080 per ounce. When breaking this landmark, gold has room to move to $2,400 per ounce and higher in the midterm. That's why you wanna own it physical, but also good producing companies. A great mid-sized gold producer is Karora Resources from Australia. The company shall produce this year over 150,000 ounces gold and targets plus 200,000 ounces within the next 2 years. Costs are under control with great margins, and they have net no debt. In addition, they found a lot of nickel, which will generate a lot of additional incoming starting this year. The stock price is undervalued, and we have a price target of $9.5 Canadian and then $12 Canadian for the next 2 to 3 years. Another great gold producer is OceanaGold. The company reported a gold production of over 472,000 ounces at all-in sustaining costs of $1,407 per ounce on gold sales of 469,045 ounces. Full-year revenue stood at $967.4 million, an EBITDA of $382 million, and a net profit of over $132 million. Full-year adjusted earnings of 21 cents per share gives the company a PE around 13. More important, they restart their dividend payment with a semi-annual dividend of 1 cent approved and payable in April 2023. For 2023, OceanaGold wants to produce between 460,000 and 510,000 ounces gold and 12,000 to 14,000 tons of copper. Longer term, production shall rise to 580,000 to 630,000 ounces gold and 12,000 to 14,000 tons of copper at AISC of $1,100 to $1,250 per ounce sold in 2025. Last but not least, quarterly dividend payer, Caledonia Mining is full on track. The company achieved 80,000 ounces gold production in 2022 and wants to grow this over time. They are in the development of a new mine at their Bilboes project, which would lead to an annual production of approximately 170,000 ounces gold, plus the 80,000 ounces gold from the Blanket mine at costs below $1,000 per ounce gold. Caledonia Mining pays a quarterly dividend of 14 US cents, giving the stock a yield around 4.7%. We see in the future much higher dividends, and also Bilboes is financeable through cash flows plus project finance. Gold will do its work, even if it should be already much higher with those inflation rates. Time to have a look at low-price producers, and you can always keep an eye on gold and other commodities and invest using our platform. Simply scan the QR code on the screen or check the link in the description. I'm Jochen Staiger, Swiss Resource Capital AG in partnership with Dukascopy TV. Thanks for watching us, and bye-bye from Switzerland.